Hello, welcome to Accounting 2010, Chapter 15 videos, Video 4 of our financial statement analysis. In Video 4, I'm going to talk about the ratios that you will be using to conduct your financial statement analysis in this course. So I'm going to jump out first and show you on your on your project, you are going to be doing a ratio analysis of inventory turnover, gross profit margin, return on equity, and the current ratio. And so one of the things that the company, or excuse me, the project asks you is which year was the company most profitable, and different types of questions concerning the profitability and comparing your company to the other company in your project. And so these ratios are very helpful to compare one company to the next. They will talk about how fast are you turning over your inventory, your gross profit, and I want you to go ahead and look up what to do to calculate these ratios. But one of the things that I want to show you is in jumping out to a company, and I'm going to use J.C. Penney's, about how to use the financial statements in order to calculate the different ratios that you will need. So if we jump out to Edgar, and I'm going to go into J.C. Penney's because I like how clearly presented their financial statements are, you will see that you will be looking at the consolidated statement of operations. This is also known as your income statement. And within the income statement, you are going to be looking at using some primary figures in order to calculate your ratios. One is going to be net sales. I know that you will need to use this number. Another one is the cost of the goods sold, otherwise known as COGS. The third will be the gross margin. This is what remains if you take sales minus cost of goods sold, how much you have left to cover all the other costs in your company. You're going to be needing to look at net income. There's your net income or loss in the case of J.C. Penney's. That's going to be another number that you're going to need. So you're going to be using your income statement in those ratios. The other statement you're going to be using is the balance sheet, the consolidated balance sheet, and there will be numbers on the balance sheet that you will be using. These will include total current assets. You will also be using current liabilities. You'll find that there. And you'll use current assets and current liabilities to calculate the current ratio. Now remember, I've put into a Blackboard links to Investopedia videos that will tell you how to calculate these different ratios. Those are very helpful. I won't recreate them there because the Investopedia videos are very concise and helpful. But you can use those if you don't remember how to calculate ratios. But here's where you find the total current assets, current liabilities. One of the things you're going to have to calculate are average inventory and average equity. How you do that is by taking merchandise inventory. You add this year plus this year and divide by 2. In current equity, in average equity, you would take the total equity for this year, total equity, plus this year, divide by 2. That will give you your average equity in the ratios that demand that calculation. In some of the ratios, you're going to need both the income statement numbers and the balance sheet numbers. You're going to have to look both of those up in order to calculate. But this is where you can start to utilize the Edgar statements for your financial analysis project in order to calculate ratios in which you can use to compare your two companies, and this is how you find them. So after you've completed videos, I do want to demonstrate to you that you can find in the notes to the financial statements answers to other questions that will be asked of you, such as significant accounting policies. In these significant accounting policies, you can start to find the answers that you need for things like and that do the companies use? What type of how do they pay income taxes? Inventory. Here we got the inventory valuations. We also can scroll down and see how do they calculate the depreciation costs. You can find that. What methods do they use for depreciation? There is a lot of additional information that you can see in the notes to the financial statements. Edgar extensively to calculate your financial or excuse me, analysis. You'll get comfortable in it and then be able to use it in future classes as you go on in your education here at MSU Denver. The next videos we will be using will be for Chapter 7. In Chapter 7, we're going to be looking at the cash accounts. Then we'll go back to Chapter 5 and be looking at how we record sales. In Chapter 6, we'll be looking at inventory. So moving forward in this course, we'll be looking at individual accounts and how to calculate and utilize the different accounts in Accounting 2010.